Everybody wants a correction and a dip until it actually hits. What's going on, everyone? Jeremy Hritz here. Courage pays better than fear trading. I hope you're having a phenomenal week. It is Tuesday, November 18th, 2025. And in case you're counting, there are 37 days until Christmas. I've got my Merry Christmas to all, my other Griswold shirt on here today. But I hope you guys are having a great day. The sun is shining. Can't believe that Thanksgiving is next week. I'm pumped. Can't wait to spend it with the family. But let's jump into the markets. I was on my soapbox yesterday. I'm not going to get on the soapbox today. But I said, everybody wants a dip. Everybody wants a market correction until it happens. And they're like, oh my gosh, bear market, Great Depression, Great Recession. We're going to zero. We're coming down. Oh, we're never going to recover from this. Oh, the markets are horrible. We're in an AI bubble. The fear is just compounding, intensifying. And there are legitimate reasons that there's pressure on the markets right now. Valuations, we know, were super high. We've been talking about a correction for the longest time, saying head on a swivel market. You have to be prepared for it to turn at any time. And we haven't had a 5% dip on the SPX. We actually got it today. Looks like it wants to come down and test that 100-day simple moving average. But we haven't had 5% since April. And so we're getting it. In a healthy bull cycle, you have to have dips. You have to have corrections. And we're getting it right now. Now, that doesn't mean that this thing is done going lower, because there's still pressures and uncertainties out there that have yet to be resolved. Starting number one with NVDA earnings tomorrow. And again, they are just put in such a predicament because it's going to be so hard to deliver what Wall Street wants. I just can't envision how they're going to be able to do that. It's the knives are out for NVIDIA and for AI right now. The sentiment is super negative. Like I said, the slightest miss or the slightest variation of a word that Wall Street doesn't like, they're going to send it down. And as NVIDIA goes down, the broader markets are going down, because it's what has led this rally in the market since 2023. So, and today it's trading at about 180. So it's given back quite a bit. And, you know, if we fall lower here off of their earnings report, you're looking at, I would say, between 150, 158. And that's going to shave a lot of points off the broader market. So just got to be prepared for that. The other thing that I'll say too is small caps have just been getting pummeled, punished, smashed since the middle of October. So they are well below the drop that we've seen on the SPX and the Qs. Not so much Bitcoin. But you would think that if we do start to get a rebound or an end of year rally, we would see small caps start to tick back up. And maybe the rally here at the end of the year won't include big tech. I mean, that's the other thing to consider, is maybe NVIDIA, Microsoft, which was downgraded today, Google, Apple, Amazon, all these ones that have been running, maybe they're just going to cool them off. Maybe finally Meta gets tapped back into the picture. They come in, they make a push, but then maybe too, we start seeing the small caps start to run, the mid caps start to run. So, you know, there's so many different possibilities, variations in terms of what can happen. And then if we want to get extreme bear, extreme fear, what if it's an everything dump? Well, yeah, I mean, we definitely can come much lower. There's no doubt about that. But I think if you look at the big picture here, the bigger picture, this is a market that has liquidity coming into it. even if the Fed doesn't cut rates in December, which I think is where a lot of this concern is coming from, they're going to cut in January. They're going to cut more times in 2026. So there's liquidity there. That's number one. Number two, the government is pumping liquidity into the markets, doing things like trying to create 50-year mortgages, send out $2,000 stimulus checks. We haven't really seen the deregulation and tax breaks hit the economy. Those are things. So, you know, let's say that worst case we continue to drop, we get down below 20%. If that would happen, that's a little bit earlier than I anticipated. Let's say that we correct into the end of the year. But then I think if that were the case, it sets us up to push back higher in the new year, maybe mid-January through April. So I don't think we're ready yet for a for a bear drawdown. Could be completely wrong. I've been wrong before. I think there are still opportunities to the upside. This is needed. This is normal. We've been calling for it, but it just feels really weird whenever it happens. So let me know your thoughts. How much further are we coming down, or is this just the flushing all the weak hands out before NVDA reports tomorrow? Let me know down in the comments below. I appreciate your support of the channel. Thank you so much. And as always, make it a great day. Honor the moment and be grateful. Take care, everyone.